normal button after it connects.
Okay. It's still connecting, so let's see. Give it just a moment.
Yeah, and it's going to
And
be
then,
live right away, so,
okay.
I'm going to take one last massive gulp of coffee.
Okay, everyone. Thank you for joining us today. We're ready to get started now. Good morning. It's now 8:32 here on the East Coast, and we're ready to begin with our presentation. My name is Mark Riddick, Senior Analyst with Sidoti & Company, and I want to thank you for joining us at the Sidoti March Small Cap Virtual Conference. Our presenting company is Heidrick Struggles. The ticker is HSII. And joining us today is Tom Monahan, CEO, and Nirupam Sinha, Chief Financial Officer. Now, before we begin, just a reminder, we will have plenty of time for Q&A following prepared remarks. We also have Susan Rosenberg from Investor Relations joining us as well. And if you do need to ask questions, just feel free to submit those at any point by clicking on the QA button at the bottom of your screen. There's no need to wait until the end. And so with that, I can turn the floor over to Heidrick. Good morning.
Terrific. Good morning. I am Tom Monahan, as Mark said. Really excited to be here. We're delighted to share the Heidrick story with you all. We appreciate people making time for us, and we thought we'd just put a few framing thoughts out there about why we're so excited about the future for Heidrick, and hopefully lay out why we think that makes us a great investment proposition. So, with your permission, Nirupam and I will spend a few minutes just talking through the basic highlights of the company's strategy and its recent performance. And I'm sure Mark will have some questions for us, and I'm sure the group will have some questions for us. So let's jump on in. I will not read the safe harbor stuff out loud, tempting though it might be. Let me dive in. Just if you're not familiar with Heidrick Struggles and you're stuck sitting next to me on a plane or train, here's what you'd hear. Number one, we believe we are the preeminent leadership consultancy advising the world's leading companies on their most important talent and leadership decisions. We work at the top of the house. We have a unique and strong collection of assets and therefore a right to win. And we have two things that give us great opportunity to grow. One is incredible access. We talk to CEOs, heads of HR, CFOs, and the leadership suite and the board on a regular basis. And they obviously turn to us for a set of decisions today, and we see opportunities to help them with an expanding set of decisions going forward. We also have proprietary technology and IP that undergirds the great work of our consulting teams. Everyone has a TAM slide, and we will spare you ours today. But it's safe to say you all talk to as many leaders as your calendar allows, and no one ever says, gee, all my leadership needs are met. I have the right leaders in the right roles, leading the right way everywhere. And as the world gets more complex, these needs grow. The need to have the right leaders grow in scale and urgency. So we have an enormous opportunity right in front of us without changing our business model or without doing anything wildly different, just continuing to have great people in touch with clients and empowering them with great technology. Nirupam and I are new here. I'm lapping probably my 14-month mark at this point, and he is lapping his 2.5-month mark at this point. So we are new. We put new service line leaders in across the board. Tom Murray was elevated to president at the same time I came in as CEO. They've got a great new leadership team, and we're just doing really deeply focused on that issue that I talked about, which is clients have incredibly complex needs, and we are really well situated to help them be successful. We did some restructuring last year to accelerate growth, get resources lined up against our most interesting and powerful growth ideas. We keep expanding capabilities and expertise. Most of this is just making sure we are investing properly in intellectual property, great new teams in areas of potential growth, and technology to bring that all together. We see the opportunity to continue expanding margin, both the work we've done on the restructuring side and the fact that we have built some assets that we think can scale should allow us to continue to achieve gains in margin structure across the coming years. And it's a great financial model. We have zero debt. We have strong free cash flow. We've got a disciplined capital allocation method that we think properly balances opportunities to grow with returning capital to shareholders. I'll spend one more slide just to talk about, kind of how we take this incredible collection of assets and bring it to bear, first to create value for clients, and then through that to create value for colleagues and investors. That's how we think about our strategy. We aim to build differentiated, deep, and durable relationships. So we want to work at the top, work on their largest problems, and work with them consistently across time. So you can see this as at the core, our core differentiator is our access to the C-suite. That has a couple of benefits for us. One is obvious access. They take our phone call. But secondly, we know what's on their mind. We know what the world's leading companies behind the closed doors of their boardroom or their executive team meetings are worried about. And we can make sure that we're in line to address those challenges. Second, deep. Everyone at Heidrick knows that if you think of our core executive search business, our flagship executive search business, every single leader we place has a mandate to drive change. No one goes out and says, get me a new CEO. I want them just to keep everything just the way it is. Get me a new CFO, keep everything the way it is. Get me a new chief people officer, keep everything the way it is. Every one of those leaders has a mandate for change, and it's always on. They might be doing a cost out. They might be doing a digital transformation. They might be doing a reorganization to get into a new market. Whatever it is, they have a mandate for change, and we have resources to help them achieve those transformational objectives. And then third, durable. We want to be working with clients on a very regular basis. We see an interesting dynamic unfolding, which is leadership issues used to be sporadic. So you would have a situation where a board would say, oh my gosh, we need to start thinking about a CEO because our CEO is 67 years old. Increasingly, that CEO on the first day of their job says, we're going to work on succession planning every quarter till I retire. And we are starting to see clients pull us into more consistent long-term relationships. What we see happening is people are starting to bring the same rigor and scrutiny and consistency to leadership decisions that they bring to financial management decisions. So we think that's a huge opportunity. It undergirds our investment in IP and undergirds our investment in technology. With that, I'll turn it over to Nirupam to talk about how we've been doing, how we've been converting those great assets into these strategies and therefore into financial returns, and then talk about how we see that performing going forward.
Great. Thanks, Tom. And thanks for having us. As Tom said, appreciate all of you taking a few minutes to hear our story. As Tom said, it's 2.5 months in, but it's been great sort of joining the business, and I really see opportunity for us to deliver for clients, and that obviously translates, as Tom said, to employees and shareholders. And so pretty excited about what we can do ahead. If we go to the next slide, Tom, maybe we can just quickly touch on how we've done in terms of each of our service lines and how we see that going into the future. Our most durable service line, as Tom mentioned, is executive search. I think it's what the largest portion of our business is, and we feel good. I mean, coming out of the fourth quarter, we saw 10% year-over-year revenue growth. We saw adjusted EBITDA margin of 25%, which is where we sort of see that holding. And then we continue to see gains in a few key metrics: confirmations, productivity, and average revenue per executive search increase. So those are all sort of good health metrics. Now, certainly, that's not the only thing we do. As Tom said, one of the pieces that we're very excited about is how we bring different service lines to our clients. And on-demand talent, we also have seen good growth in terms of 3% year-over-year revenue growth for the fourth quarter. And there we continue to see the business well positioned. We saw an EBITDA adjusted loss for the fourth quarter, but as we kind of head into this year, you'll see in the next page a little bit of kind of where we see that business going and where we see the future of the targets, and we feel like we're on course for that. And same thing with Heidrick Consulting. We saw some pretty significant growth in the fourth quarter of 11.5%. We saw confirmations up in that business in the fourth quarter as well, over year-over-year. And that's a business where we did do some work last year, and some of the restructuring that we did has helped us and will continue to help us as we go into 2025. Now, underpinning each of these businesses, Search, On-Demand Talent, and Heidrick Consulting, is investments that we make on R&D and digital enablement. And this is sort of the platform that we're creating that enables and allows us to provide the services to our clients across all of these service lines. So you see that there's an asset and IP that we've sort of built here that we're very keen to leverage, and we think there's good scale that's going to come from that. If we go to the next slide, I think this is something that we've put out before, and we just wanted to make sure that we shared with you today. As I said, Heidrick Search, we kind of saw the growth year over year. I think we felt very good about it. But longer term, we're kind of buying 4 to 6% through the cycle growth in that business. And the margin is 25% Q4. That's kind of where we think it'll be. We think it's a good, solid sort of margin that allows us to then invest in other parts of the business and use that cash to return to shareholders as appropriate. In terms of Heidrick on demand, again, 7 to 11% growth through the cycle. So we have a little bit of work to do as we head into 2025 here. And our longer term adjusted EBITDA margin target for that business is high single digits. And consulting, again, the revenue growth of 8 to 12%, we felt good about where that was in coming out of Q4. And longer term, we see that as low double digit sort of EBITDA margin targets. So I think the way to think about this is we feel good about where all of these businesses are positioned. Search is sort of at the targets that we would like to see, and the others are on their way to those targets. So with that, I think we'll probably leave our presentation and for us to sort of talk for a little bit, and we'll turn it over to Mark for Q&A.
Thank you very much. And as a reminder, folks, if you would like to submit a question, just click on the QA button at the bottom of your screen to submit those. We will get started with a few that I sort of wanted to sort of cover the big picture topics of the day, if you will, with the amount of uncertainty that we're seeing in the current environment, stock market volatility, and now talks of a potential recession. Maybe you could talk a little bit about how Heidrick has managed through times of uncertainty in the past, and how you're prepared for the future if there's more economic challenges.
Yeah, I think without question, our business has cyclical natures like a lot of others, right? There are portions of our business where clients will, a lot of things that clients can't stop altogether, but they will slow down. As someone who has a new CFO, it would have never occurred to me, even during a difficult time, to say, well, I'll just do without one. So there are portions of our business that are just need to have, and that gives us a lot of ballast. So if you look back, Heidrick has, what you tend to see, we talked about this at Investor Day, Mark, as you know, you tend to see, if you look at sort of just a quarter, you can see some volatility at the quarter level. If you take a 4 or 6 quarter rolling average, a client might say, I'm going to hold off starting this project, but they'll flip the switch again 45 days later. So when you smooth out those quarterly decisions, you see very consistent client usage. And to the other side, look, we have variable costs that are natural stabilizers of profit and cash flow. So, if we have a year when stuff moves from one year to the next, our compensation tends to reflect that a little bit. So, and I think more broadly, when we think about challenging economic times, we also are reminded that's when clients need us most, right? And I'd say probably it doesn't even need to be challenging. We're not in a recession. If I could call macro, I wouldn't have to wear a tie to work. So my sense of where the economy is going is as good as anyone else's. But we do know when there's complexity, volatility, and tumult in the world, clients need help. They need help to understand, what should I be focused on? What sort of leadership do I need? What gaps might I have in my team? Do I need to double down here versus there? And so complexity is our friend. No one ever, we joke internally, no one ever got to an end of a meeting and said, everything's going great here right now, exactly as we want it. Let's call Heidrick, right? Those are, when things are smooth sailing, they're not like we need new leaders leading in new ways. So complexity and volatility are our friends. It's our job to be in front of clients, taking advantage of it.
Maybe just a couple things to add. One is to underscore, I think, Tom's point there. I mean, change is our friend, right? So our business thrives on change and partnering closely with clients. I think the other thing that's something that we've worked hard on is, I think we have more stickiness with our clients. Some of that durable, differentiated that Tom was talking about that we didn't have before. Our platform and approach, I think we've created IP, technology, global reach, data insights that are kind of diversifying our revenue streams. So that's also a piece of the business that if you look back to choppiness in prior periods, we didn't have. And so I think we feel that the change can be something that we withstand better than we did previously, but also that clients need us more than ever.
Excellent. And Tom, you referred to the investor day. Now it's interesting. The investor day was in December. We had our change of administration in January. It's only been about 4 months, I guess, or so since the investor day, but maybe it feels longer than that. Can you talk a little bit about what you're hearing from clients, particularly since the change of administration, and maybe what they're talking about as far as how it's affecting their outlook?
Look, I think the Heidrick has literally thousands of clients that we support, and they're all over the world in different markets and different industries. So every client use case and every client conversation is different, and that's always true. But I think generally what we're hearing, if you sort of pull all the way back, Yogi Berra famously said it's tough to make predictions, especially about the future. And this didn't start with the election. If you think of a board of directors sitting down in autumn of 2019 and trying to pick a new CEO or a new CFO for the next 5 years and what problems they thought that person was going to encounter, they would have missed a pandemic, they would have missed inflation, they would have missed supply chain. We have all the specs from that period. No one had any of these things. So I think in general, when we talk to boards and leadership teams, what they're saying is, look, the world is a lot less predictable. And so the types of leaders and leadership we need are changing. We don't want someone who's had a playbook that they've done twice, because the odds are pretty good it's not going to work again, let's say in the era of AI. So that's probably the first most important thing. When we look at our client data, they're saying, hey, I need a leader who can lead through multiple environments because they're likely to see them. So that's probably the first thing. I think secondly, what we see is, while no one, and this is a broader thing having nothing to do with the election, but I would say, people are thinking, okay, what does it mean to be global? No one's saying, hey, we're not going to be global. No one's saying, hey, we're going to hunker down. But they are thinking, where do I put people? Is my supply chain sufficiently resilient? Do I have multiple sources of supply to help me in that world? Am I able to think about how the company is set up for a world where there may be some fragmentation in some industries? Do I need new capabilities in new markets? And those are obviously great questions for us, right? We can engage them and help them think about how to build out those capabilities. Loosely speaking, macro and geopolitics they were already a concern. The election only made some of those issues more significant, but I think people are already looking at it over the past decade and saying, how do I think about these things? How do I think about talent in different markets, et cetera? And again, that helps. So I think those are the two. And then third, you'd be completely unsurprised to find out, in hundreds of clients conversations I've had, a phrase I've never heard has been, we've got this AI thing figured out and locked down. Nothing to do here, nothing to look at, right? So they're looking and saying, do I have the right talent to execute on this? Do I have the right strategy? Do I organize the right way? Are my my technical leaders the right ones? Are my business leaders accessing the technical leaders the right ones? And so you're going to be unsurprised to find out that, even the, you read an earnings call transcript and you hear about all the great things the company's doing with AI, and you get on a call with the CEO who says, help. So I think those are the three major themes that kind of percolate across. But again, every client has its own. So you got the first one, leader's going to have to lead in multiple different environments. Who can do that for us? Second one is the definition of being global is changing, and people aren't pulling back from it, but they're just thinking about it differently. And then third, I think people are on the front end of this major technology wave, and people are still wrestling with, moving beyond the experimentation stage and really scaling their impact. And that they realize that's a people issue. That's not a which LLM, which platform I put stuff on. Those are the big three we see.
Gotcha. Excellent. And it's interesting. So moving from sort of the macro to the the controlling the controllables, if you will. Tom, you've been leader of the company now for a little over a year. I know you're going with a long-term approach, and you've communicated that at the Investor Day. Maybe you could talk a little bit about where you are in that process, in the transformation or investment cycle for Heidrick, and how we should view this year as sort of a pivot to new direction, and continuing to need to continue to make investments both in the business, and then maybe if you talk a little bit about where you see the time frame of the payoff and benefit from some of the changes investments that you've already undertaken.
Terrific. And I'll start and I'll let Nirupam finish,
Mhm.
so we can talk specifically about how that rolls through this year. And but I think as we said in our prepared remarks, we made substantial change to the leadership team, including the two folks on screen here. So it's a new team that is tightly aligned against the objectives we shared, and that our clients will tell you, and they tell us, and they pay us to say that's that's the most important first step in any transformation, is we have the right team focused on the right stuff. You saw us take additional steps with the restructuring last year to accelerate growth and improve the economics of Heidrick Consulting, and you saw that already pay off, right? And they're not that team. A team thinks it's not yet baseball season, and it's a global team, so many of them wouldn't even know what I mean by they think they're only in the first or second inning, but they know they've got huge opportunity in front of them. So we see opportunity ahead to we've made substantial changes to drive growth and margin, and you see great outcomes from some of those already. And there's work ahead to keep scaling the returns from the investments we made. And think about what's in our R&D line, which is a combination of some technology investments and some investments in very scalable IP. The way we talked about that at Investor Day is that that number should grow at a very different rate than the top line, right? Those are scalable. That should be a scalable thing, and you expect to see that going forward. And as we think about the year, maybe I'll have you talk a little bit about how we see this coming together in a 2025 context.
So I think a couple of thoughts there. One is, in terms of just pure guidance that we've given, we've said, for Q1, 263 to 273 million. And I think we feel good about where that would leave us for the rest of the year. And in terms of the margin piece that Tom mentioned, I think we are cautiously optimistic about where we think margin can be this year. And we do think that the back half of this year will see some margin expansion. And that'll start being the beginning of a cycle where hopefully we continue to get the return of the investments that Tom mentioned have already been made. But I mean, as we talked about in the prior part of this conversation, there is a little bit of choppiness out there too. So we just have to keep mindful of that, and the little bit of delay from a client saying, "Hey, I want to start this project," 30 days later, that has some impact that'll roll through the year. So I think we're optimistic about where we are with the business, but obviously the macro environment is something we just have to make sure we keep in mind as we think about the rest of 2025.
Excellent. And then for those who may not be familiar with you, Nirupam, you just joined just a few months ago, so congratulations on your role there. I was wondering if you could talk a little bit about your views and priorities, particularly around balance sheet and capital allocation levels of comfort, leverage ratios that you think is appropriate for Heidrick, and how you view the sort of balancing out the views of between paying the dividend and share repurchase activity in that prioritization.
Yeah, sure. And thanks for the wishes, Mark. It's, as I said earlier, it's been great and very exciting to get going here at Heidrick. 2.5 months in now. Look, I think primarily for us, we're very committed to executing a strategy to drive organic growth. We feel good about where the lines of business are, as we've shared with you today. And we see that as priority one. And we do think that there's just so much to be done with clients that the incremental dollar going into organic growth will have the best kind of return at this point. Having said that, in our business, there's always some inorganic opportunities that can accelerate growth and kind of explore those agencies. And just to give an example of what that can look like, it's often we're having a conversation to bring in some great talent that we are looking at, and it's a smaller sort of boutique firm, and that ends up becoming a M&A like type acquisition when it's effectively acqui-hire. And so that's where there are kind of opportunities potentially for us in terms of using the balance sheet a little bit to accelerate the hiring of talent and bringing in great talent. And that can be true in each of our service lines, though I think most people think of that as in the search business. So I think we feel good about the balance sheet we have. We also have access to liquidity to help achieve any of this that we need. So I think we feel very good about kind of where we are from the organic growth journey and the opportunity to use the balance sheet as appropriate to accelerate that. And of course, we think all of that will pay off for shareholders as we continue this story.
Great. And then maybe you talk a little bit about the what the acquisition pipeline might look like at this point, how active you might be comfortable in participating there, as well as maybe if there are any particular levels, whether we're talking larger acquisitions, smaller acquisitions, any particular return targets that you might be looking on, or how should we think about the sort of both the prioritization and then maybe what the pipeline might look like given the current environment?
Yeah, sure. As I said, I think for us, generally we're on an organic growth, kind of journey here, and so for us, that's the priority. Having said that, we're always, it's our job, right, and our duty to make sure we're looking at all opportunities that can accelerate the business, and so we're open to the right sort of acquisitions, but I think mostly that's going to be smaller in nature, tuck-in like, and as I said, gave the example. Often, in any of our service lines, but particularly search, as we're looking at good talent and bringing in onboarding of good talent, that turns into an acquisition. And so I think that's kind of where, we've seen the most opportunity. And I think as we think about the rest of this year, that's where we're going to continue to see opportunity, and we're going to be, smart and pragmatic about how best to bring in the talent, whether that's acquisition or not.
Okay, great. And then we have about a minute left. So I did want to, first of all, again, thank everybody for participating, but I also wanted to leave a moment for some closing remarks. Tom, if you'd like to share those with the audience.
Sure. I think we laid out the most important parts of the Heidrick thesis. It's an exceptional platform with incredible assets and incredible access. We've got a clear strategy for converting those assets and access into great returns for clients first and foremost, and through that, great returns for shareholders. We're excited. We laid out some targets. We're feeling good. Obviously, our performance to date, those are multi-year overcycle targets, but our performance to date shows that we have the capacity to go after them, and we have the ability to go. We're demonstrating the ability to go execute on the huge opportunity in front of us, and we know that creates value for clients, colleagues, and shareholders.
Excellent. Well, certainly compelling story. So I want to thank you for joining us today, and thank all of our participants for taking time. And everybody have a wonderful and productive remainder of the day.
Thanks, Mark.
Thank you so much, everyone.